Welcome back to the Jeremiah Show. My special guest, Marta Grumberg, with the Grumberg Accounting. If you missed it, we were talking about some of the big expenses in the first segment. You can go back on the podcast and catch up. If you own a restaurant, if you want to own a restaurant or open a restaurant, if you just dreamed about opening a restaurant, this is the show for you. Marta is co-owner of the Grumberg Accounting, bringing over a decade of expertise in financial management, tailored specifically for the hospitality industry. For the past 10 years, Marta's firm has been the only accounting company dedicated exclusively to serving restaurant, bars, and catering businesses. Welcome back, Marta.
Thank you. Great to be here.
So good to have you here. Some great advice in the first segment. I appreciate it. What are some of the factors that that cause restaurants to fail that you see?
Bad cash flow management. I think it's the biggest one. Um, Cash flow is very important because, like I mentioned before, there are cycles of better times and a little bit slower times during the year. So it's very important to plan ahead and budget. What happens is that you receive your money from sales immediately, right? Like within the 48 hours from credit card firms, but your payments to your vendors are usually net 30, net 60. So when everything is good or business is growing, you're thriving and things are good and you have some extras. But during the time when the season is slowing down, you get the money now, but you need to pay your vendors in net 30 or net 60. It's kind of spiral crunch there. And if you don't plan and if you don't budget, you'll find yourself without any money to pay your vendors. And that's a problem. And I've seen businesses going in a big trouble and a big problem because of that. It's the financial cushion really quick, and they find themselves trying to raise some money, get some more, and it's a problem. So it's very important to know your business, to know your cycles and budget ahead of time to make sure you are all set for the slower periods of the year.
Now, what if you're a brand new restaurant? What do you recommend that they, if they can, that they have in the bank to operate off of because they haven't realized what their slow times are yet. They haven't seen the cycle of the business for a full year. Is there an amount that you recommend that they have stashed away for payroll for vendors or
Yes, it's very important that the first year or the first couple years, if you're new in the business and you don't know your cycles yet, to have this financial cushion behind you. It depends on the fixed expense that you have in your business because the rent and the fixed expense is different from business to business. And it's important for you to make sure that you have at least 6 months. And sometimes I will be very conservative. I'm usually very liberal, but on this one, I'll be very conservative and make sure maybe even a full year to make sure that you have just in case, that just to give yourself a space for those small mistakes, that you did not have enough time to downsize the team, you did not realize that you should do some deliveries or maybe Uber Eats during between 11 to 3, and to learn your cycles, you need to make sure you have a cash. It's different and depends on your fixed and variable expense.
um, I worked for a restaurant one time as a manager, and the owners had a revolving credit line just for payroll. So basically, if they were short, it could pull from the revolving credit line for the payroll and make up the difference. And then they pay, they put in money into it in the busy months. So they never had that big stress of a payroll without revenue that had come in for a slow month. I thought that was smart that they did that. Um, and I'm sure banks, do you recommend something like that? Is there a program like that a restaurant owner can go to talk to a bank or bank manager about?
Yes, definitely yes. But I bet they were in the business for a while and they already knew their cycles. That's why they knew
Yeah,
how
they
much
did.
they need and how to manage it. If you're new to the business, you can find yourself with a loan for with a 200 or $300,000 a loan, and that you're out of credit there and you don't have any money to pay anymore. So you need to make sure that you do it in a smart way, in a wise way. It's a great idea, great solution. You just need to budget and plan with this too.
I've known restaurants that have they've been stolen from by their bookkeeper. And uh, one of the something on your website that stuck out to me as great advice, and I wanted to bring it up so that nobody ever goes through this. I had a in-house bookkeeper, and then I had an accounting firm, and the accounting firm wanted all of the bills to go to the accounting firm. All the invoices would go there. And then the bookkeeper would just work off of the invoices that came in daily. What happened is the accounting firm never requested the invoices to go there. So the bookkeeper had them sent to her house. And then she was able to change QuickBooks to match rather than having a banking statement and the invoices, she was able to match basically the banking statement with the in-house QuickBooks. And on one of the mistakes or the things that you've pointed out is how important it is to check your banking statement against your books and maybe have that stuff go to your house or go to someone that they trust like you. Can you elaborate on that on the what can happen and how if
Well,
you if you're not balancing and you're not seeing that bank statement, what can happen? What can go wrong?
yes, oh, so many things can go wrong. First of all, it can be a pure human mistake. And at the end of the year, you want to make sure that your books are tied and reconciled to your bank accounts and that you can all pull it all together and forward it to your CPA, to your accountant to do your taxes. That's why it's very important. I found so many cases. We had a case when employees were depositing the same check twice, and that's a very easy thing to catch if you reconcile your books and you review it. I've seen some technical glitch with the credit card money, and one day was just missed. So a restaurant did all the sales, but some glitch happened and the money did not come to their bank account. I've seen managers deleting some POS transactions to get some cash to themselves. I've seen, let's see what else, what interesting else happened to the guys that I work with. Some cash on hand is also a huge thing for the restaurant business because they use it all the time to pay out tips. Sometimes it's negative, sometimes it's positive. It's important to keep an eye on that. It's important that your employees know that you keep an eye on that. Reconciliation keeps you organized. It gives you the it makes you sleep quietly and nicely without worrying about what will happen there, because that means that everything you see in a bank matches your software, and that means that the whole huge managerial operation works. The POS is connected to your accounting software, and it all ties with your bank. And you asked me about bookkeeping, right? About the bookkeeper
Yeah.
doing some things. Well, I haven't seen a lot because people don't really share with me what their previous bookkeeper did for them. We had a case with clients that came for us, and the bookkeeper was writing herself checks just because, and that's it, and cashing it. I don't know what she was thinking to herself, and why did she do that? Because it's very easy to see and it's very easy to find out. Um, but that's what she did, and she got fired,
So
obviously,
what
and
should you do?
they were upset.
That's horrible, isn't it? I mean, especially when the business owner is working so
Yes,
hard with very small margins, and then that something like that happens, somebody takes advantage. It's just terrible, and I think it happens more often than not, unfortunately. But
yes.
what would you recommend uh, that owner does? I mean, aside from hiring you, What would you
Review the bank account.
review the
To
bank
protect
account?
themselves from the accountant, from the bookkeeper, review the bank.
Review it themselves and check
Yeah.
it. Yeah.
Once
Okay.
in a while, at least. If somebody steals from you, they will do it constantly. They won't stop, and you will see it. So in most cases, in my situation, I watch it. I watch it very very carefully. I do have a connection with the vendor, so I see if the vendor double charge or if the employee deposited some check twice. Sometimes, by the way, it happens by mistake with all the funds deposits. They deposit it once, and then after a month, they very organized people. They find the check again, and they did not mark that they already deposited it, and they deposit it again. So I watch it. I watch the cash flow. I watch the POS, and I always reconcile. I reconcile the cash flow. I reconcile the POS with the bank statements. So if
Checks
something
and
disappears, or
balances.
yes, if something disappears or something is shady and I don't understand why I have this mismatch or this variance, I will always find it. It has to balance in the end of the day. But as an advice against your financial people, first of all, if you suspect that your bookkeeper or accountant is shady or doing something wrong, change. Like I said, doctor, lawyer, and accountant, just for your feeling. But generally, watch your bank. I think it's easy enough to review
Yeah.
the transactions. You will see that something is wrong there.
Yeah. Okay. I want to give some goals out to the listeners here and get your recommendation. So these are factors that can increase your success rate to have these goals when you budget. Always start the year. I think you'd probably agree with me with a budget, right? You need an operating budget. You need to have forecasted or used historicals to create an operating budget to run from, to run off of, to give you guidance. Um, so in revenue, what do you like to see for food, and what do you like to see in the bar, like a revenue mix? A 70-30, a 60-40? I mean, what does that matter to you? Is there a goal that you like to see there for the revenue mix?
No, no, because it's very depend on the business type. Some businesses are all food oriented and they serve alcohol just to accommodate the food, and some of them the other way around. I had a client that was barely breaking even on the kitchen. It was a simple kitchen of some salads and burgers, and he ran the kitchen just to be able to serve his front of the house clients. So he did all his margins and he was successful from the front of the house, selling drinks, and the margin came from there. So it's very depend on the
On
vision
the
of your business,
Yeah.
on the type of your restaurant, because you can have American bar, you can have just a bar, you can have this fancy chef restaurant, and it all will be different. A catering, it will have a different spirit and a different operation.
Let's talk about food cost and bar cost, and let's use, because I know that the answer is probably going to be similar that you give, that it depends on the type of restaurant. For instance, a steakhouse is going to have a higher food cost. A seafood place will have higher food cost. Italian,
Yeah.
pizza, Mexican food, that's all going to have typically a lower food cost. So I know it depends on the concept. Let's say you have but what's a good target for a food cost? Meaning the amount that you spend to bring the food in and put it on the plate before you sell it. What percentage do you like to see?
So the rule of the thumb says 30, 30, 30. 30 for payroll, 30 for COGS, and 30 for general expense. The lower, the better,
Right.
obviously, for COGS, for the variable expense. But that's the rule of the thumb. If you keep the approximately 30, 30, 30, you're supposed to be fine.
Okay.
Because the COGS is
And
supposed to be 30.
do you have like an ideal gross profit margin that you look for or that you like? Or again, that depends on the type of restaurant.
Yes,
Yeah.
it depends on the type of the restaurant and depends how long it was. Newer restaurants will struggle a little bit more with that because they're still trying to find their way around. It's very dependable, but well, the higher the better
Yeah. Of
margin.
course.
I cheer for that. Yeah, I cheer for that. The higher the better. I always say, don't be afraid to change and adapt to the market. Don't be afraid. You're not going to lose the spirit of your place. It will just increase your profit. It will give you more income. It will diversify your income, and it's very important. If you have slow hours during the day, this is what costs you the most. Try to be creative. Make a happy hour. Create a small menu for deliveries. See what else you can do to squeeze more profit. The more, the better.
That's an excellent point. When I used to manage, I would look for those. I would take those from my POS, the hours where the sales dropped, and then I'd say, okay, those are my hours that I'm going to work on. Let me work on something to
Yes.
to fill that blank, to bring people in. When you talk about 30% for labor, does that include the comps, taxes, and employee benefits and that number?
Yes.
Yeah. Okay.
Yes.
What do you
Everything.
like
Yeah.
to see as a direct operating cost average?
Direct. I guess 30%. No. I don't know. You know what? I don't know right now. I don't know to say on top of my mind. It's funny. I did not
I
think
used to
about it.
always try to hit 10 to 12% on direct
Yes.
operating. And then admin, 3 or 4% is what I would recommend to you. Would you agree with that? Administration costs?
Yes, but again, it also depends on the type of your business,
Yeah.
because catering will be different from restaurant, will be different from a local bar, will be different from some chef restaurant.
Well, how about
So
the big costs or the big categories like marketing and advertising? Is there a percentage of the dollar that comes in that you like to see go to marketing and advertising? That was a big lesson that you learned with your own restaurant, right? That you weren't putting enough time and effort into marketing and advertising. What do you like to see now? Do you like to see it 7 cents, 3 cents from a dollar go to marketing and advertising? Is there a rule of thumb that you like to follow or
I
advise on?
think during the lower seasons, it's funny, it's the other way around, but it gets higher because you put more effort into advertising and marketing when you're slow, and it's the other way around because you try to attract more attention. During the high season, sometimes it will be very minimal, around the 1 to 2%, and sometimes it will be a little bit more. I do see this tendency in restaurants, and it works for them. And it's funny because you say, "Oh, it's your slow season. Why you're wasting your money on marketing and advertisement?" Because you're trying to build a higher profit during the slow season. So
Hmm.
people will pay more for entertainment, for bingo games, for some music, maybe some promoters, which are expensive, but sometimes worth it.
Yeah, that's good
I,
advice.
I will I will put it all under the general expense, and the general expense will be not no more than 30%. And within the general expense, I think it can be flexible, and you can manage it depending on the season and on the time. During the high season, you might have more managerial expenses, and during the slow time, you can transfer it to the marketing expense. So it can be a little bit flexible to accommodate your needs during particular period.
When someone is coming to you and they're opening a restaurant and let's say they're looking at different properties, and they're building out some, forecasting their sales versus their rent and all, putting all the expenses that you need into that budget or that pro forma. What do you advise them? What percentage should they spent on rent or a lease of their revenue?
So rent, it's interesting. I do have a client that we were discussing, just talking with my husband about it. The rent is huge. Just the rent is so huge that it doesn't matter how good he does, it's just impossible. It's just impossible to accommodate this fixed asset. If you through the number and you calculate, you see how big is the revenue that you need to do, and it's almost impossible. So it's very important to make sure that you watch your fixed asset and you make sure that it's doable to have some profits, and that in the end of the day you're going to make some money. People get excited about location. People get
Yeah.
excited already to start, so they want to rent right now. they've been looking for a couple of months, so they already, like
They
cutting
fall in
corners, like you
love,
said, they fall in love with the
yeah, before
location,
it's
and
realistic.
and yeah, and owner feels that. So it's important to make sure that that you're within the category of making sure that you throw a good break-even point report before that, and make sure you can have it. It's interesting. You remind me. I have one of the clients that was very creative, and he had also rent problems. He was new in a business, and he owned to the owner like a lot. I think a year of rent, and at some point it was already impossible to pay that. So they work it out, and the landlord became got some percentage from the business and
Hmm.
became an investor, which was creative and nice. And I was very proud of how things worked out, because and very happy because it was creative and it was to change and think outside of the box, and things worked out for
And
them.
how are
And
they
now
doing
he's
now?
they're doing okay. They're doing okay. They're partners now. So the landlord has his interest for the success of this business.
Yeah.
They're doing good now. And the food industry is so dynamic and so intense that it changes. One day you can be so successful, and the other day you just don't understand what time's coming. I think the pandemic also showed it to us
Yeah.
how fragile everything is, particularly the food industry. People thought that they're going to lose everything, and in the end of the day things worked out for them. And I always say in all podcasts, I'm very proud to say that none of our clients went out of business during the pandemic time,
That's
which
good.
is impressive, and make you feel very happy for what you
Yeah.
do and how you help people.
Well, you said something at the beginning that I liked. You said their success, is your success. So you're very invested in making sure that they're around to as
Yes,
a testament of what you can do for them. So
exactly,
let's
I
we're gonna
count
take
on them.
yeah, and we're gonna take another quick break real quick here. But before I do, what is the average restaurant make in profit? I mean, I think people should be realistic about what's left over.
It might be as 10%.
Yeah.
And yeah, because people, it looks that it's easy to go in the food service industry. It looks like it's easy, but the margin is low, and you really need to know what you do and watch your numbers. It's 30. We said 30% payroll, 30% costs, 30% general expense, and you stay with a very small margin of 10%, and 10% is good.
Hmm. Yeah, I looked up on the Restaurant Association of America, and it said between
Mm.
3 and 10%. So right
So
now,
see,
like,
I'm being optimistic.
yes, I like that though. That's what you want in an accountant, someone to be hard and firm, but
I
optimistic
push
also.
it.
Yes,
I
push
push
it,
it to
push
the
us.
10% from the 3%.
You can do it. You can do it.
You can do it,
I,
yeah.
I like it. Think outside the box. Okay, so let's take that real quick break and we'll come right back. Um, I wanted to tell you a little bit more about Grumberg Accounting. It's only for the food service industry, which that's what you want. If you're in the restaurant industry, really someone that specializes in restaurant books and management and financials. There's a lot of different services that Marta Grumberg offers at Grumberg Accounting, but primarily what you need to hear, I think, is that it's geared towards the food service industry and it's an animal. I don't care what anyone tells you. If you can run a restaurant and you can run the restaurant business, you can run anything. Um, it takes into account all of the variables from marketing to managing food cost and pour cost and employees um, and rent and expenses and on and on. It's a real big living, breathing animal, and you need someone like Grumberg Accounting. What sets Grumberg Accounting apart is their ability to combine deep industry knowledge with operational precision. And they don't just balance your books, they analyze your performance. They compare it to industry benchmarks and give you actionable insights to protect your margins and improve profitability. From managing your cash flow, payroll, and vendor payments to handling government requirements and audits, Grumberg Accounting covers every financial detail so that you can focus on running your business while they safeguard its financial health. Direct communication, zero turnover, and industry specific expertise. That's what makes Grumberg Accounting your strategic partner, not just your bookkeeper. Go to grumbergaccounting.com to learn more or contact Marta or her team. That's Grumberg accounting.com. We'll be right back.